Imagine turning a modest $50,000 investment into a staggering $3 million without picking individual stocks or timing the market. Does that sound unbelievable? It's not. In fact, a handful of Fidelity Funds have done just that, quietly transforming patient investors into millionaires. With economic uncertainty, inflation concerns, and market volatility shaking up traditional strategies, one thing remains clear: choosing the right funds can make or break your financial future. But how do you separate the winners from the underperformers? And more importantly, how can you position your portfolio for exponential growth? This video reveals 5 powerhouse Fidelity funds that have historically turned small investments into life-changing wealth. You'll discover what makes these funds exceptional, the secret behind their market-beating returns, and how to leverage them to build long-term financial security. Whether you're an experienced investor or just starting, this deep dive will equip you with insights on asset allocation, compounding returns, and risk management, key factors that can supercharge your portfolio. The strategies revealed here could be your roadmap to financial independence, allowing you to retire earlier, achieve generational wealth, or simply enjoy a worry-free future. If you're ready to learn how these Fidelity funds defied market downturns and delivered extraordinary gains, keep watching. Your path to millionaire status might just begin here. Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. Firstly, let's discuss what makes Fidelity an excellent investment company. From the size of assets under management, cutting-edge innovation, and an unwavering commitment to helping investors build wealth, Fidelity Investments checks all these boxes and more. With an astounding $4.3 trillion in assets under management, Fidelity has cemented its position as a financial powerhouse trusted by millions of investors worldwide. But beyond the numbers, what truly sets Fidelity apart is its relentless focus on innovation, accessibility, and long-term wealth creation. Warren Buffett once said, "The stock market is designed to transfer money from the active to the patient." Fidelity understands this principle better than most, developing investment solutions that reward patience, minimize costs, and maximize returns. One of its most revolutionary moves: zero-fee index funds. While many firms charge expense ratios that quietly chip away at investors' gains, Fidelity became the first major company to eliminate fees altogether, removing a significant barrier to entry and allowing everyday investors to keep more of their hard-earned money. This game-changing strategy isn't just about cost savings, it's about democratizing investing. Traditional brokerage firms often cater to institutional investors and high-net-worth individuals, but Fidelity has made it clear: wealth building should be for everyone. Now let's dive into these life-changing Fidelity funds, starting with Fidelity Fund Number 1, Fidelity 500 Index Fund, ticker symbol FXAIX. If you're looking for a simple yet powerful way to build wealth, the Fidelity 500 Index Fund FXAIX should be at the top of your list. Often hailed as one of the best passive investment options, FXAIX closely mirrors the S&P 500, an index that has historically averaged about 10% annual returns, turning long-term investors into millionaires. Legendary investor Warren Buffett has long recommended low-cost index funds as the smartest way for everyday investors to grow wealth. FXAIX is a perfect example. With an ultra-low expense ratio of just 0.015%, it allows investors to keep more of their earnings, unlike actively managed funds that eat away at returns with high fees. The power of compounding. How FXAIX can turn thousands into millions. Let's put FXAIX's potential into perspective. A $50,000 investment growing at an average annual return of 10%, in line with the S&P 500's historical performance, could balloon to over $500,000 in 30 years without picking individual stocks or timing the market. This hands-off approach to investing has helped countless investors build generational wealth. Before we dive into number 2, if you find value in this video, please hit the subscribe button to join our growing community. We appreciate your support. Thank you. Fidelity Fund Number 2, the Fidelity Total Market Index Fund, ticker symbol FSKAX. If you want to own a piece of the entire U.S. stock market with a single investment, the Fidelity Total Market Index Fund FSKAX is one of the best choices available. Designed for investors who want broad diversification, long-term growth, and ultra-low cost, FSKAX, as it is fondly called, provides exposure to thousands of stocks, from blue-chip giants to small but fast-growing companies, giving you a front row seat to America's economic expansion. Why FSCAX stands out: the power of total market investing. Unlike funds focusing solely on large cap stocks, FSCAX includes small cap and mid cap companies, capturing opportunities for higher growth. This approach ensures that investors benefit from established market leaders like Apple and Microsoft and up-and-coming companies poised for exponential gains. Legendary investor John Bogle, the pioneer of index investing, famously said, "Don't look for the needle in the haystack, just buy the haystack." That's precisely what FSCAX does. It gives you the whole market in one fund, reducing the need to guess which sector or company will outperform. One of the most significant advantages of the Fidelity Total Market Index Fund is its rock-bottom expense ratio, 0.015%, meaning more of your money stays invested and compounds over time. A slight difference in fees can make a huge impact. Over 30 years, an investor paying high fees could lose hundreds of thousands of dollars in potential returns. With FSCAX, your gains remain yours. Historically, the total U.S. stock market has delivered average annual returns of around 10%, making FSCAX an excellent choice for wealth building. Investing in individual stocks can be risky, but FSCAX spreads your money across thousands of companies, significantly reducing the impact of any single stock's poor performance. This makes it a powerful hedge against market volatility, ensuring your portfolio remains resilient through economic downturns. Fidelity Fund number 3, the Fidelity Dividend Growth Fund, ticker symbol FDGFX. Are you looking for a way to build long-term wealth while enjoying a steady income stream? The Fidelity Dividend Growth Fund could be your perfect investment solution. This fund focuses on high-quality companies that consistently increase their dividends, offering investors both reliable cash flow and strong capital appreciation, a combination that has historically outperformed the market over time. Let's discuss why dividend growth matters. Legendary investor Warren Buffett once said, "The best investment you can make is in a business that can consistently grow its earnings." That's precisely what FDGFX delivers. It invests in companies with strong balance sheets and a track record of increasing dividends year after year. This signals financial strength and ensures you get paid while your investment grows. Reinvesting dividends is a game changer for long-term investors. Studies show that over 40% of the stock market's total returns historically come from dividends. If you invest in FDGFX and let those dividends compound, your money works harder for you, growing your portfolio at an accelerated rate. In addition, dividend-paying stocks tend to be more resilient during market downturns. Unlike speculative growth stocks, which can suffer dramatic declines, companies that consistently pay and grow dividends typically have strong fundamentals, allowing them to weather economic storms while continuing to reward investors. This makes FDGFX particularly valuable for retirees seeking stable income and long-term investors looking for a balanced approach to wealth creation. Whether you're planning for retirement, building a passive income stream, or just looking for a more stable way to grow your wealth, FDGFX offers a proven investment strategy. Fidelity Fund number 4, the Fidelity Growth Company Fund, ticker symbol FDGRX. If you're looking for a high-powered investment that taps into the fastest-growing companies, the Fidelity Growth Company Fund is a game changer. This fund isn't just about investing, it's about owning the future. FDGRX focuses on companies with explosive earnings growth, groundbreaking innovations, and massive market potential. It has a heavy concentration in technology, healthcare, and consumer discretionary sectors, industries that have historically outperformed the broader market. FDGRX rewards investors who think long-term, with a track record of outperforming its benchmark through strategic stock selection. Historical performance data shows that FDGRX has been a top-tier growth fund, significantly outpacing the S&P 500 over the years. Its focus on high-growth stocks means early investors can benefit from the next wave of market leaders, from cutting-edge tech giants to biotech pioneers reshaping healthcare. Unlike dividend-paying funds, FDGRX reinvests all its earnings into growth, ensuring that every dollar works toward increasing your investment's value. While this might not appeal to income-focused investors, it's the perfect fit for those who want maximum capital appreciation. Consider this. If you had invested $10,000 in FDGRX 2 decades ago, your investment could have grown exponentially. far surpassing traditional index funds. Let's discuss who should invest in FDGRX. 1. Growth-seeking investors who want exposure to high-flying companies with massive upside potential. 2. Long-term investors who can ride out volatility for the potential of outsized returns. And 3. Tech and innovation enthusiasts who believe in the power of disruptive industries. Fidelity Funds number 5, the Fidelity Zero Total Market Index Fund. Ticker symbol FZROX. Imagine keeping every penny of your investment returns. No hidden fees, no expense ratios eating into your gains. That's precisely what the Fidelity Zero Total Market Index Fund, FZROX, offers, making it one of the most revolutionary index funds available today. Let's discuss why zero fees matter. Traditional index funds charge expense ratios that, while seemingly small, can cost investors thousands of dollars over time. With FZROX, Fidelity eliminates this barrier, allowing you to maximize compounding growth without paying a dime in management fees. Jack Bogle, the legendary founder of Vanguard, once said, "In investing, you get what you don't pay for." Fidelity has taken this principle to the next level, making FZROX one of the best zero-cost investment options available. Unmatched market exposure, FZROX saves you money and provides broad exposure to the entire U.S. stock market, investing in thousands of companies across all sectors. This diversification helps reduce risk while capturing overall market growth, making it ideal for long-term investors. Historically, total market index funds have delivered strong, consistent returns, and FZROX follows this proven formula. By mirroring the entire market, investors can benefit from both capital appreciation and dividends, creating a dual income stream that compounds over time. So, now the question is, who should invest in FZROX? 1. Cost-conscious investors who want to maximize long-term returns. 2. Beginner investors looking for a simple, diversified, and low-cost way to enter the market. 3. Long-term wealth builders who understand the power of compounding and market growth. Now listen, in the words of the great investor Charlie Munger, the big money is not in the buying and selling, but in the waiting. Therefore, strategically combining the discussed funds, such as the Fidelity 500 Index Fund, Fidelity Total Market Index Fund, Fidelity Dividend Growth Fund, Fidelity Growth Company Fund, and the Fidelity Zero Total Market Index Fund, can create a well-rounded investment portfolio that balances growth, income, and risk. This allocation allows for broad market exposure through the index funds, while also capturing growth potential and dividend income through the growth and dividend-focused funds. Over a 30-year investment horizon, this diversified portfolio could yield impressive results. Assuming an average annual return of around 8%, a conservative estimate based on historical performance, this initial investment could grow to approximately $500,000. The combination of capital appreciation from the growth-oriented funds and steady income from the dividend fund enhances the overall return potential, making this strategy particularly appealing for long-term investors. The importance of compound growth cannot be overstated in this context because that's where the magic is. By reinvesting dividends and capital gains, investors can take advantage of compounding, where returns generate additional returns over time. This exponential growth effect is crucial for building substantial wealth, especially over a multi-decade investment period. Additionally, regular portfolio rebalancing is essential to maintaining the desired asset allocation and risk profile. As certain funds outperform others, rebalancing ensures the portfolio remains aligned with the initial investment strategy, preventing overexposure to any single asset class. This disciplined approach helps manage risk and positions the investor to capitalize effectively on market fluctuations. By strategically combining these funds and adhering to a long-term investment strategy, investors can create a robust portfolio designed for growth and income, ultimately paving the way for financial success. As we wrap up, I encourage you to take action. If you found this information valuable, please subscribe to our channel, like this video, and share it with friends who might also benefit from these insights. Your support helps us continue to create content that empowers you to explore new income opportunities. If you are interested in strategies that can help you transform your dreams into success in 2025, check out our video on that topic. It covers 5 proven strategies. The link is in the description. Please note that we are not financial advisors. This information is for educational purposes only. We'll see you back here next time, Trailblazers. Until then, take care and thank you. See you at the top.